in the future. It is a contract entered into by the company. It is a financial instrument issued by the company and which requires the company to issue ordinary shares in the future. Good examples of this include employee stock option or the employees share option. And also we have the convertible securities issued by what? By the company. These are terms we were able to define in our previous class. So in part B of the question, you're told 𝐷 equity balances at 1st of October 2020 comprised of the following. Comprised of the following. So number one, we are given the ordinary share capital of the company. We have the 10% irredeemable preference shares. We have the share premium, the revaluation surplus, the retained earnings, and the shareholders' fund. And then we are told the trading results for the company were as follows. So these are like the result of the company. In other terms, the profit. We have the profit for the year after tax for 2 years, 2022 and 2021. And then we have some additional information about it. On 1st January 2022, the company issued 400,000 ordinary shares at full market price. Number two, on 1st of April 2021, the company made 1-for-5 bonus issue to the existing shareholders, utilizing the retained earnings. Number three, on 1st December 2021, 𝐷 invited the shareholders for IT issue. Okay. Number four, we are told the company has had in issue convertible loan stock of 6 million, which carries effective interest rate of 8% per annum. And then you're told each 1,000 shillings, 1,000 nominal value of the loan stock will be converted at the holder's option into 600 ordinary shares. And then you're told on 1st of June 2022, holders of 1.5 million loan stock exercise their conversion option. And number five, we are given the income tax rate. And then number six, we are told the company paid, declared and paid dividends on both shares of both the classes of equity shares. So what are you required to do? Roman 1 is we compute BEPS. Roman 2, we compute the diluted earnings per share. So we are going to start with Roman 1 of the question, whereby we are required to compute the basic earnings per share. In Roman 1, we are required to compute the basic earnings per share. The basic earnings per share, that is BEPS. Roman 1, we are required to compute the basic earnings per share, basically for 2 years. The year which ended 30th of September 2021, and the year which ended 30th of September 2022. So here we are required to compute the earnings per share for 2 years. Automatically, we start with the first year here. So we start by computing the basic earnings per share for the year which ended 30th of September 2021. So in this case, we say to compute this basic earnings per share, BEPS, we take the pathos, we divide that with what? With 1/0. We divide that with what? With 1/0. Remember, you say that formula is period to guide you. By the end of the day, we say formulas here are not marked. In a file, formulas do not have any marks. So we need to start by computing the first item here, that is the pathos, which is the profit attributable to ordinary shareholders. Recall, we say that this one is computed by taking the profit after tax, which can also be known as the net income, which can also be known as the profit for the year. Basically, to this, then we less the preference dividends for the year. Preference dividends for what? For the year. And then equally to this, we say, in case we are computing the earnings per share for a group of companies, we less the profit which is attributable to the non-controlling interest. And then to this, we said we add any loss from the discontinued operations. From the discontinued what? Operations. So what are we given in our question here? Now, if we go back to the information we have below paragraph 1, we have this profit after tax. So let's take that profit after tax, specifically for this year, 2021, and our values are in thousands of shillings. So for 2021, this one is given as 31.46. That is the company's profit after tax. Then we need to basically check whether there were some dividends which were paid, preference dividends which were paid. And if you go to the information we have below paragraph 1, you'll be able to see that at the start of the year, because this year, which ended 30th of September 2021, this year started on which date? This year started on 1st of October. Remember, the next financial year will start 1st of October. This year started on 1st of October 2020. That is when that year started. So the information we have below paragraph 1, those are balances at the start of the year. So, and if you check on what you have there, you can see that this company had issued 10% irredeemable preference what? Preference shares having a value of 8,000. Now, remember the other question which we did, we were given redeemable preference shares. And I think there is something explained that the preference dividends for the redeemable preference shares, they are classified as part of the finance cost. We said finance cost is an expense. And therefore, in arriving at this particular profit, the dividends on redeemable preference shares will have been deducted. That's why we say, in case you're given redeemable preference shares, don't list their dividends here. But if you check on this preference share, they are irredeemable. So being irredeemable, their dividends were not classified as part of the finance world cost. So we must compute those dividends and basically we list them here. So how do we compute those dividends? We take 10%, this one, times the amount of preferential capital. The preferential capital is basically how much? 8,000. 8,000. And that one will give us what? That one will give us 800. Is it 800? Is it 800? That is 10% of 8,000. Yes, that one will give us 800. And then from there we check, do we have this one? Basically, this, we are computing earnings per share for D Limited. This is not a parent company. We don't have profits attributable to NCI. Equally, in this case, do we have any loss from discontinued operations? No. So let's compute the PATOS. Let's get this one PATOS. PATOS. This one will give us what? This one will give us what? 23 what? 2346. Is that what you're getting? Is that what you're getting? Yes, 2346. So having that, then we can be able to move and we compute the weighted average number of ordinary shares. Remember, we say to compute this one, we take the ordinary shares which were issued at the start of the year plus other shares which were issued in course of that year. Now, what we need to do basically is we check whether we are given any transaction or basically we are given any transaction regarding the issue of shares within the past year, because I hope you can see that in this question we have information about 2 years. The first year ended on that year, September 2021. The other year, that year of September 2022. So we need to check whether is there any information you're given about shares which were issued within the past year, which runs from 1st October 2020 to that year of September 2021. Let's go to the information which we have in the additional information. In the additional information number 1, we are told on 1st January 2021, the company issued 400,000 shares at full market price. Now, is that a transaction for year 1 or is it a transaction for year 2? We just need to recall that the first year is ended on that year of September 2021. Automatically, that transaction, which took place on 1st January 2021, that is a transaction for the first year. Is that in the position? Is that a transaction for the first year? Yes, that is a transaction for the first word, for the first year here. Yes. And then from there we have the other one, number 2, on 1st of April 2021. 1st April 2021, that is still within the first word, within the first year. And then the other one is 1st December 2021, the right issue note 3. Right issue note 3. In note 3, basically 1st December of 2021, that one is within the second year. Is within the second word? Yeah. And then I think note number 4, in the last paragraph, we are told on 1st June 2022, which should be the second year, there was conversion. So meaning that in this case, we need to proceed and basically compute the one-offs for 2021 by taking into account the shares which were issued at the start of the year. And also, we take into account note number 1, note number 2. Note number 1, note number 2. So we say to compute this, we need to have a column here for the date. For the date, basically the column for the description. For the description. The other column here should be for the number of shares. number of shares. The other column here will be for the time factor. And the last column here will be for something called what? The weighted average number of ordinary shares. Weighted average number of ordinary shares. Weighted average number of ordinary shares. Yes, so we start with the shares which were issued, the number of ordinary shares which were issued and fully paid at the start of the first year here. Where do we get those shares which were issued at the start of this year? We get that below paragraph 1. Below paragraph 1, you're told delimited equity balances on 1st of October 2020, which is basically the start of year 1. So in that case, we can be able to determine the number of ordinary shares which were issued here. So we'll say on 1st of October 2020, so we have the balance brought down. And how do we get the number of shares? To get the number of shares, we will take the ordinary share capital, which is basically 20,000. Remember that 20,000, those are not number of shares. That's what you can see up there. We're given those values in shillings. So this is the value of the shares. So to compute the number of shares, we need to divide that with the par value. The par value in that case is 10. So this means that the shares which were issued and fully paid at the start of the year were 2 million, or actually 2,000. 2 million. So our values here will be in 1,000 of shillings. So the shares which were issued and fully paid at the start were 2,000. Then the time factor here will be 12 out of 12. We say that those shares will be held for the whole year. So basically, we take this times that, which equally will give us weighted average number of ordinary shares of 2,000. Of 2 what? 2,000. That's what we have. Then from there, let's go to the information you have in note number 1, note number 2, because those are transactions which occurred in the first year. So we first of all go to note number 1, and you're told on 1st January 2021, the company issued 400,000 shares at full market price. So we will say on 1st of January 2021, there was issue at full market price. How many shares were issued? The shares which were issued were 400. And actually, we said even before we move to the other column, can you get the total for this? The total for that will be 24. Then we need to determine, or actually to come up with the time factor. These shares will be held for how many months during that year? Take into account they were issued on 1st of October, sorry, 1st of January, that is 1st of January. I hope you can be able to recall when the year is ending. That year of September. Those shares will be held for how many months during that year? They're to be held, or they were held for how many months during that year? They were issued on 1st January, the year is ending 30th of September. Yes, they were held for 9 months out of 12. And remember, we said these shares which are issued at full market price, they should be weighted on time basis. They should be weighted on time. They should be weighted on time basis. So let's take this times that, and I think that one will give us 300,000. 300,000. Is that what you're getting? 300,000. 300,000. Is that what you're getting? Is that what you're getting? 400 times 9 all over 12. We should give us what? 300,000. So then from there, we still have another transaction. That is note number 2. 1st April 2021. 1st April 2021, we have said, is within the first year. Is within the first year. We say on 1st of April 2021, we are told the company made 1-for-5 bonus issue of ordinary shares to the existing ordinary shareholders. So on this date, we say there was a bonus. There was a bonus issue. So we need to determine how many shares were issued during this bonus issue. So we are told the company made 1-for-5 bonus issue. 1-for-5 means that the company was to issue 1 share for every 5 shares which were held. So how many shares were held before the bonus issue? The shares which were held before the bonus issue, we said you get that from this column here. The shares which were issued before the bonus issue were 2,400. 2,400 shares. So we cross multiply, then we divide. 1 times 24 divided that with 5. And that will, this one will give us what? This will give us what? That will give us how many shares? Yes. So the shares which were issued during the bonus issue are were 480. Were 4 what? Were 480 here. Were 480 like that. 480 like that. Now, these particular shares, we said they should not be weighted on time basis. So in this case, we don't have a time factor there. But in this case, we said we need to do something to this share. We multiply them with a certain fraction. How do we compute that fraction? To compute that fraction, we take the shares which have been weighted on time basis before the bonus issue. The shares weighted on time basis is this plus this, which is basically 23. We divide that with the shares which have not been weighted on time basis, what we have there. So that is a fraction. We multiply those shares with that word, a fraction there. Sasa? Yes, so we multiply these shares with 23 all over 20, 24 like that. Yes, so we have 48 times 23 divided that with 48. And basically this one will give us what? That one will give us 230. 230. Is that what you're getting? 230. 230. 230. Talk to Mwalimu here. Douglas. Faraisha, is that what you're getting, Ismail? Is that what you're getting? Yes. Yes, 230. Then do we have any other transaction which occurred within the first year? Now, if we go to note number 3, 1st December 2021. 1st December is within the second year. 1st December is within the second year. Note 4, the last paragraph, 1st June is equal within the second year. So basically what that means is that during this year, there were no other shares which were issued. So, and we can get now the weighted average number of ordinary shares. We add all this, which basically give us 25. 2530. 2530, confirm whether you're getting 2530. 2530. 2530, yes. So we compute the basic earnings per share by taking the pathos 2346 divided that with 1 ounce, which is 2530. So this one will give us what? So we have 2346. 2346 divided by 2530. And this one will give us shillings 0.927 shillings per what? Shillings per share. Shillings per. So here you're getting 460. Yeah? You're getting 460 here. Okay, you need to correct Marimu. That is wrong. Is it 460? 14? 460 up way. Okay, sawa. Sawa. So then let's correct this one. Let's correct this one. Let's correct this one. So it should be 2760. 2760. 2760. So I hope now the total is correct. So then let's compute the earnings per share. The basic earnings per share. 2346 divided by 2760. Yes. So this one will give us shillings 8.5 per word per share. Per share. Is that what you're getting? Is that what you're getting? Is that what you're getting? 0.85. 0.85. 0.85. Yes. So let's move to the other year, that is 2022. So we compute the basic earnings per share for the year which ended 30th of September 2022. So in this case, we can start by computing the pathos, the profit attributable to ordinary shareholders. And like in this case, we don't have to repeat all this. Take into account, we know to compute this one, we just take this profit after tax minus preference dividends. You can compute that directly. So we take a profit after tax for 2022, which is given below paragraph 1. So, and that one is given as 3612. 3612 minus the preference dividend. Will the preference dividend change? No, the preference dividend will not change because As per the additional information, the preference share capital remains the same. There is no transaction you're given from note 1 all the way to note number 6, which shows that there was a change in preference share capital. So the preference shares remain the same, 10% times what? Times 800. 8,000, that is. So this will give us what? 28? How many 20? Huh? 28, 2812. Is it 2812? Yes, 2812. So having that, then we move and basically we compute the weighted average number of ordinary shares. So we have the same arrangement. We have the date. We have the description. We have the number of shares, a number of shares. We have the time factor, and the weighted average number of ordinary shares, that is one-offs. That is one-offs. Yes, so we start with the opening balance. Remember now this year started on 1st of October. 1st of October 2021. That is when the second year started. I hope you can be able to recall the first year ended, that is September 2021. So the second year started the following day, 1st of October 2021. So we start by recording the shares which were issued and fully paid at the start of the second year. Who can give me this number of shares? The number of shares issued and fully paid at the start of the second year. Give me that. Give me that number. We get it somewhere here. The number of shares issued and fully paid at the start of the second year. Yes, how many shares? How many shares? I'm told by 1424. I'm told by 1424. Remember, 14, there is something we are almost forgetting here. We didn't add this one. This one should be 2880. We almost forgot to add that one. So the number of shares issued and fully paid at the start of the second year, should they still be 24? Now, the number of shares issued and fully paid at the start of the second year, you take whatever we have here. Whatever you take here, don't take this because some of the shares here have been weighted on time basis. You take that. Sasa? Yes, 2880. These shares will be held for the whole year. The time factor is 12 all over 12 there. Sasa? Yes. So then we move to the other transactions. Basically in note number 3. In note number 3, we are told on 1st December 2021, there was a right issue. I hope you can see these are transactions you have come across in all questions. Right issue. So we said you must be in a position to know how to deal with that. So the right issue was made on 1st of December 2021. There was a right issue. Now remember, we said as far as the right issue is concerned, two things, you need to compute two things always. Number one, you need to determine how many shares were issued during the right issue. Number two, you compute the theoretical right price. So let's start by computing how many shares were issued during this particular right issue. How many shares were issued during the right issue? We are told that on 1st December 2021, D Limited invited the ordinary shareholders for right issue in the proportion of 1 for 4 at a price of 12. The shares were quoted immediately before the right issue at a price of 15 per share. All the rights were fully subscribed. So we need to determine, first of all, how many shares were issued during the right issue. And you're told the company invited the ordinary shareholders for right issue in proportion of 1 for 4. 1 for 4 means what? 1 for 4 means that during the right issue, the company was to issue 1 share for 4 shares, which were held. That is basically the interpretation for that. 1 for 4. The company was to issue 1 share for 4 shares which were held. We know the shares which were held before this right issue were 2880. So the shares which were held before, they were 2880. So we just cross multiply and we divide. So you have 1 times 2880 divided start with 4. Divided start with what? With that 4. So basically this one will give us 720 shares. 720 shares. 720 shares. Is that correct? 720 720, 720, 720, 720, yes. So then from there we compute the theoretical X-rate price. Now, before we compute this theoretical X-rate price, we need to get some information from that note number 3. So this one share, which was to be issued during the right issue, we are told it was to be issued at a price of 12. Each share here during the right issue was to be issued at a price of 12. And then we are told that the market price before the right issue was 15 shillings. So before the right issue, each share had a market price of 15. So having that information, then we say to compute this one is quite simple. You just come here and you say, if before the right issue you held 4 shares, and each share was trading at a price of 15, then during the right issue, you are to be issued with 1 share, write that below this, 1 share at a price of 12. At a price of 12. Yes. So basically what that means, after the right issue, if you held 4 shares before, after the right issue, you'll be holding 5 shares. What will be the market price of these 5 shares? To get the market price of these 5 shares, we take this times that, which basically will give us 60. This times this, which will give us 12. And basically we add these two. So which will be 72. It basically means that after the right issue, the market price of 5 shares will be 72. So what will be the market price then of 1 share after the right issue? We take the price of 5 shares, 72, we divide that with 5. So that will give us the market price of 1 share after the right issue. 72 divided by 5. And that will give us what? That one will give us 14.4. 14.4. And remember, I say that the computation for this, there is always a mark for this. There is always a mark for that. Make sure you get that one correct. Now, having that, then what we said is that these shares which were issued during the right issue, we say that these particular shares must be split into 2 components. The shares which were issued at full market price and the shares which were issued at nil consideration. Okay. So, but let's first of all, we record the shares which were issued during the right issue. This one, 720. And first of all, we get this total 0, 0, 6, 36. And then now these shares, we split them into 2 components. First of all, we determine issue at full market price. Issue at full market price, which we said is equal to the shares which were issued during the right issue, 720 times the issue price. Each share was to be issued at a price of 12, and then divide that with the theoretical X-rate price, 14.4. 14.4. Then these shares, they must be weighted on time basis. So these shares were held from December all the way to October. These shares were held for how many months? Are they 10 months? Are they 10? In 2022, we have 9 months. In 2021, we have 1. Is it 10 out of 12? Are they 10 months? Talk to Morimo here. Are they 10 months? Yes, they were 10. In 2021, we have December. That is 1 month. In 2022, we have 9 months. A total of 10 months. So we weigh those shares on time basis. So we have 720 times 12 divided by 14.4, then times 10 divided by 12. And basically, this one will give us 500. That one will give us what? 500. Then from there, we determine the bonus element. We determine the bonus what? Element. The bonus element will be equal to the total shares which were issued during the right issue. The total shares which were issued during the right issue was 720, these ones, 720, minus the shares which were issued at full market price. Shares issued at full market price is not 500, but basically these are the shares issued at full market price. Was that 600? Yes, I think it was 600. Yes, 600. So the bonus element is the 120. 120. Then equally, this particular bonus element, we say this one has to be multiplied with a certain proportion. Although I think in this case, if you check on the shares which were weighted on time basis before the right issue, they are 28.80. The shares which are not being weighted on time basis were 28.80. So let's just, although that one will not change, 28.80, the shares weighted on time basis over the shares not weighted on time basis. So that one will not change anything. So this one therefore remain 120. 100 and what? 20. 120. 120. 120. Actually, you can put it here, 120. So we are done with that. So let's move to the other transaction. We're done with note number 3. Let's go to note number 4. You're told the company has had in issue a convertible loan stock of 6 million, which carries an effective interest rate of 8%. This means that this company had issued a convertible loan stock. Because if you go back to the information we have below paragraph 1, there is no any information about those convertible loan stock. But this company had issued 6 million convertible loan stock. Effective interest rate is 8%. We are told each shillings, 1,000 nominal value of the loan stock will be convertible at the holder's option into 600 ordinary shares. And then you're told on 1st of June 2022, holders of 1.5 million exercised their conversion option. Exercise their conversion option. Basically, what that means is that they converted them into ordinary shares. They converted them into ordinary shares. So what we need to do on that date, that is 1st of June 2022, we need to compute how many shares were issued on conversion, because on this date we are told there was a conversion of a convertible loan stock. Convertible loan stock. So how many ordinary shares were issued on conversion? How many ordinary shares were issued on conversion? How many ordinary shares were issued on conversion here? So we need to have the conversion rate, which is given in sentence 2. We are told each shillings 1,000 of the nominal value of the loan stock, or this current loan stock having a value of 1,000. These ones are supposed to be converted into 600 ordinary shares. And then in the last sentence of note number 4, we are told the convertible loan stock which were converted into ordinary shares, they had a value of 1.5 million. So in 1,000 of shillings, that one should be 1,500. Loan stock having a value of 1.5, they were converted into ordinary shares. We need to determine how many shares were issued on conversion. We cross multiply, then we divide. So we have 1,500, this one, times this, divided that with what? 1,000. So that and that will go, and then that and that. So this will give us what? This one will give us 0, 0. I'm getting 900. I'm getting 900. I'm getting 900. Is that what you're getting? 900? Yes, 900. 900. So these are basically the shares which were issued on conversion. We write that here. The shares issued on conversion were 900. And then in this case, we said those shares which are issued on conversion, they are always treated as an equivalent of the shares issued at full market price. They should be weighted on time basis. These shares were held for how many months? Remember, the year is ending September. So they were held in June, July, August, September. Are they held for 4 months? June, July, August, September. Are they 4 months? Are they 4 months? Are they 4 months? Yes, 4 months. 4 months. So then we get now the final value, So 900 times 4 divided by 12. And that one will give us 300. So these shares are treated as an equivalent, of shares issued at full market price. Then here we have 1.5 million. 1.5 million is the last sentence of note number 4. On 1st June, holders of 1.5. 1.5 in 1,000 of shillings. Remember, we are working with all our figures in 1,000 of shillings. Daniel, is that the case? So we can take that one here as 1.5. All our figures are in 1,000 of shillings. That's yes. So basically, first of all, we get is I don't think we have other shares. That one will give us 4.5, and then we get the one-offs now here. Let's get the one-offs. We have 2880 plus 500 plus 120 plus 300. And basically that one will give us 38. That one will give us 38. Are you getting 38? Are you getting 38? Yes. Yes. So we compute now the basic earnings per share. We take the pathos, which is 2812, divided by 1/0, 38. So what do we get here? We have 2812 divided by 3800, and basically I'm getting 0.74 shillings per what? Shillings per share. Shillings per share. Shillings per share. Is that what you're getting? Is that what you're getting? Is that what you're getting? 0.74. Is that what you're getting? Yes. Yes, that is basically what is required. So we're done with the Roman 1. Actually, this is a very, very good question. So let's move to Roman 2 of the question, whereby we are required to compute the diluted earnings per share for the year which ended 30th of September 2022. So we are required to compute the diluted earnings per share for the year which ended 30th of September 2022. Now, in this case, we say to compute this one, the diluted earnings per share, we follow 3 basic steps. Number 1, we need to go back to the question, and basically we identify which potential ordinary shares was this company having in this year. Remember, we said when checking for these potential ordinary shares, you check whether the company had granted the employees a share or a stock option. As per this question, we don't have any. Number 2, you check whether the company had issued any convertible security. Sasa, yes. And I think in our case, we have a convertible security. As per the information we have below paragraph 1, we don't have any convertible security. These preference shares, unlike the other questions which we did, these preference shares are not convertible. Don't consider them as potential. They are not convertible. Sasa, yes. In our case, what we have is the convertible own stock in note number 4. So in this case, we only have one potential ordinary share. We only have one potential ordinary share. What we have in note number 4, and that is the convertible own stock. Convertible own stock. That is basically the only potential ordinary share. Now, having identified that potential ordinary share, step 2 we said is we compute increase in earnings, increase in number of shares, and finally we compute what? The diluted earnings per share. But before we compute the increase in earnings, increase in number of shares, just like what we did in the other question, there is some information which we need to analyze here. Now, we know that this second year, this year, basically was ending on 30th of September 2022. This year started, therefore, on 1st of October 2021. So if we go to note number 4, we are told this company has had in issue a convertible own stock of 6 million. So this means that the company had issued a convertible own stock. If you are not given the date when they were issued, in this case, we will assume that they had been issued, or at the start of the day, they had already been issued. Because you can see, we are not told they were issued during the current year. They were issued as at the start of the current year. So meaning that the convertible own stock which had been issued at the start of the year here, they had a value of 6 million. That's what we know. Then if you go to note number 4, the last paragraph, on 1st of June 2022, and we have said 1st of June 2022, this is 4 months to the end of the year, and basically 8 months from the start. So on this date, some of the convertible own stock were converted into ordinary shares. Shillings 1.5 million of the convertible own stock, these ones were converted. These ones were converted into ordinary shares. So meaning that the ones which were not converted will be equal to this minus this, and that is 4.5 million. They were not converted. They were not what? Converted. That information is very, very important. So having this, we can proceed and basically compute the increase in earnings. Increase in earnings. And I hope you can be able to recall we said the increase in earnings in relation to things like convertible debentures, convertible own stock, convertible bonds. we say that this one is equal to the interest which was paid during the year. We multiply that with 1 minus tax rate. So we need to compute how much interest was paid. We then multiply that with 1 minus tax rate. So the interest which was paid, in this case, we say there are two ways you can compute that. You can compute that. You can compute the interest which was paid from this date to that date, and then you compute the interest which was paid here to that date. Alternatively, you can compute the interest the company was supposed to pay for the whole year, which would be the effective interest rate times this, and then you less the interest which was not paid here. So because some of the convertible loan stock were converted into ordinary shares, the holders of these loan stock were not entitled to interest for the last 4 months. Understand? Yes, but let's use the other approach, whereby we compute the interest for the past 8 months. The effective interest rate is 8%. So therefore, the interest which was paid in the first 8 months here will be equal to 8% times a convertible loan stock having a value of 6 million. Our values, we work with our values in thousands of shillings. Now, this one is per annum, but we're interested with the interest for the first 8 months here. 8 months. That is the interest the company paid for the first 8 months. And then in the last 4 months, we take effective interest rate times the convertible loan stock, which were not converted into ordinary shares, 4.5, or basically 4,500, times 4 all over 12. That will give us the interest which was paid in the last 4 months. And then in this case, we multiply that with 1 minus tax rate. Tax rate is given in note number 5, tax rate 30%. So we take 1 minus 0.3, which will be 0.7. 0.7. That is the interest which was paid during the current year, but net of tax. But net of tax. Let's work out this. So I'm getting the 20 here. I'm getting 120 here. And basically, I'm getting a total of, I'm getting that total there. Confirm whether you're getting that value. Is that what you're getting? 308, 308, 308. Is that what you're getting? 308, yes. So that is basically the increase in earnings. So then from there we move and basically we compute the increase in what? The increase in number of shares. Increase in number of shares. So to compute the increase in number of shares, the first thing we must have here is the conversion rate. The conversion rate, we have it in note number 4, sentence 2. We are told each shillings 1,000. Each shillings 1,000. 1,000 of the convertible loan stock are supposed to be converted into 600 ordinary shares. Into 600 ordinary shares. In this case, we need first of all to compute how many ordinary shares would have been issued by the company in the first 8 months, and then we do the same for the last 4 months. In the first 8 months, the convertible loan stock which had been issued by the company, they had a value of 6 million. They had a value of 6 million. In thousands of shillings, that one should be 6,000. So this will apply for the first 8 months. So we want first of all work out this. So in the first 8 months, we have 6,000 times 600 divided by 1,000, 1,000 like that. And then we are saying that this one will apply for the first 8 months out of 12. And then in the last 4 months, the convertible loan stock which had been issued by the company, they had a value of 4.5. 4.5. So we take 4.5 times 600 times the 600 divided by 1,000. And basically that will apply for the last 4 months out of 12. That is how we compute the increase in number of what? The increase in number of shares. So this one will give us what? So that and that and that will go. So 1, 2, 4. So this one will give us 24. I'm getting 33. I'm getting 33. I'm getting 33. The increase in number of shares. I'm getting 33. I'm getting 33. I'm getting 33. I'm getting 33. Is that what you're getting? Yes, so that is confirmed there. So having this, then I think we can proceed and we compute the diluted earnings per share, the DPS, which is equal to the per loss. Recall the formula. To this we add the increase in earnings, the increase in earnings divided by that one with one loss, plus the increase in number of what? Of shares. So in this case, we will take the per loss, the one loss, for computing the basic earnings per share, basically for the year 2022, and that is what we have here. This is the one loss and per loss for 2022. We have 2812 divided that with 38. So to the per loss, we add the increase in earnings, which is this one, 308. And then to the one loss, we add increase in number of shares, this one. And we get the diluted earnings per share. The diluted earnings per share. And I hope you have noted that this diluted earnings per share is always less. Is always less than basic. So that's why we refer to it as diluted. Is always less. Divided that with 71. So I'm getting what? 0. 0.439 to 3 decimal places, at least to 3 decimal places. 0.439. 439, is that what you're getting? 439, 439. 439, 439, is that what you're getting? Is that what you're getting? Okay, so okay. So that is it. That is what was required. So there is a question here. I think is similar to. I think it's similar to a question which we did in our previous class. This one actually similar. Is actually similar to the other question which we did. April 2022. That is the question 3C. So it's similar. It's actually similar to the other question which we did. Because I like this question also, they keep repeating the same concept. The same concept. So that question you do it as an assignment. Is similar to the other question which we did. Similar to the other question which we did. So how many minutes do we have? So can we go to this question? I don't know whether we will be able to finish. September 2021. September 2021. 2021. September 2021. But I hope now if you're understanding this particular topic, and I hope you can see it's not difficult. Is this topic difficult? It's actually one of the interesting topics. Is that the position, Ismail? Is one of the interesting topic. Monica, this is one of the interesting topic. Is that the position, Stella? Is that the position? Is that the position? I hope you're understanding now. Yes, and they should be the topic should be becoming now more interesting. Actually, most of the topics, most of the questions, is just like a repetition. It's just like repetitions. Okay, so let's see this one, September 2021. September 2021, question 2A. September 2021, question number 2A. Question 2A. But I think we can just take a small breather over just 5 minutes. Just 5 minutes, and then we come back. We come back after 5 minutes only. A break of 5 minutes, we come back. Yes, so we continue. We continue. I hope you have that question with you. We continue. So this question, I think, is almost similar to what you have done, but with a slight difference. So we are told the capital structure of Shera Limited is at 31st of December 2020, and there was a problem with that date because you should not be given share capital at the end, just like the other question. That one was supposed to be at the start. So this one was supposed to be 1st January 2020, or actually 31st of December of the previous year. So we should be, yes, I think that was supposed to be share capital at the start of the share capital at the start of the year. So we have ordinary share capital at 10% cumulative preference shares. We have 12% convertible roll notes. We have the profit after tax. Okay, and then we have additional information, number 1, number 2, number 3, number 4, number 5. So what are we required to do? We are required to compute the basic earnings per share for the year which ended 31st of December 2020. So, okay, so I think we can do this quite fast. We see whether we will finish. So we are required to compute the basic earnings per share. The basic earnings per share for the year which ended 31st of December 2021. So this one is equal to the PATOS divided that with what? With the one-offs. So the PATOS, in this case, we will take the profit after tax, which is given below paragraph 1. And this one is given as 171,200. And then to this, we less what? The preference dividend. So I think as per the additional information, note number 1, 2, 3, 4, I think we don't have things like profits attributable to NCI. We don't have loss from discontinued operation. So I think we just need to compute the preference dividends using the information we have below paragraph 1. The information we have below paragraph 1. So this company had issued 10% cumulative preference shares. So the dividends which were supposed to be paid should be 10% of the preference share capital. Preference share capital 40,000. So this one will give us what? This one will give us 167,200. 167,200. Confirm whether that is correct. And then from there we move and we compute the weighted average number of ordinary shares. Is that correct, Sarah? Sounds clear? Is that correct? So we compute this weighted average number of ordinary shares. So here we need to have various columns: the column for the date, the column for the description, the number of shares, the time factor, and basically the one-offs. The one-offs, the weighted average number of ordinary shares, and also our values are in thousands of shillings. Our values are in thousands of shillings here. Yes. So we start with the opening date. I hope you can see this year ended 31st of December 2021. So meaning that this year started on 1st of January 2021. That's why I say the information which we have in paragraph 1, there is a problem with that date. That was supposed to be 1st of January 2020. That's her? Yes. So whatever you given here, excluding the profit, those are opening balances. That's her? Yes. So there was a problem with that date. So the shares which had been issued at the start of the year, that is balance brought down. We should take 60,000 divided by 10, which will give us 6,000. I've said we take the share capital, 60,000, divided that with per value, per share, and that will give us 6,000. So the time factor is 12 out of 12, and that gives us 6,000. So then from there, we move to note number 1. Note number 1, we are told on 1st of Feb. Okay, this one should be 2020, sorry. 1st of Feb 2020. So in this case, we are told there were some shares which were issued at full market price. Issue at full market price. How many shares? 1.5. In thousand of shillings, 15. In thousand, not in thousand of shillings. These are not in shillings. These are the number of shares. In thousands should be 1,500. So that will give us a total of 75. So these shares taking into account, they were issued at full market price. They should be weighted on time basis. They will be held for how many months? That is from Feb all the way to December. Those should be 11 months. 11 out of 12. 11 out of 12, because we are only excluding January. We're only excluding January. So let's work out this. We have 1,500 times 11 divided by 12. So this one will give us 1375. So then from there, in note number two, there was a right issue. I hope you can see in all questions we have this concept of right issue. 30th of June, 2020, there was a right issue. We need to compute how many shares were issued during the right issue, and what is the theoretical X-right price. Theoretical X-right what? Theoretical X-right price. So we are told on 30th of June, the company made a right issue of 1 ordinary share of 4 shares which were held. This is 1 share for 4 shares which were held. So we know the shares which were held before are this one, 75. So we have 1 times 75, divided that with 4. Divided that with 4. And basically this one will give us what? 75 divided that with 4. This one will give us 1875 what? Shares. Then we compute the theoretical X-right. Theoretical X-right price. So the theoretical X-right price, we need to know this 1 share, which was to be issued during the right issue, was to be issued at a price of how much? What was the market price before the right issue? In the last sentence of note 2, the exercise price was 36. So each share here was to be issued at 36. And then you're told the market price before the right issue was 48. So the theoretical X-right price in this case, we can use now a shortcut. Before the right issue, if you held 4 shares, and each share had a market price of 48, then during the right issue, you are to be issued with 1 share at a price of 36. So we get the total here 5. And then we take this times that, 36. And then 48 times 4, which will give us 192. 192 plus 36, 228. Theoretical X-right price, therefore, is 228 divided by 5. That one will give us 45 point what? 45.6. 45.6. That is the theoretical X-right price. Sasa? Yes. Now, the shares which were issued here, they were 1875. 1875. First of all, we add this. So this will give us 75.38. And then these shares, we need to split them into 2 components. Issue at full market price, which is equal to the shares which were issued during the right issue, 1875, times the exercise price, 36. We divide that with the theoretical X-right price, 45.6. And then these shares, we have to weight them on time basis. These shares is like they were issued on 1st of July. So they were held for 6 months out of 12. Yes, so we have 1875 times 36 divided by 45.6 times 6 divided by 12. And I'm getting a figure of 740. You confirm whether you're getting that value. So then from there, we take the bonus shares. The bonus shares. Are you getting that value? Yes. Confirmed. So the bonus shares will be equal to the total shares which were issued minus the shares which were issued at full market price. And I think this one is having a decimal times 12 divided by 6. Yes, so here in this case, I'm getting 1480 to the nearest whole number, 1480. So then in this case, we multiply these particular shares with a certain fraction, the fraction of the shares which had been weighted on time basis before the right issue, which should be this plus tan, which is the 73.75 divided by the shares which were not weighted on time basis before the right issue, which is 75. Is that fraction correct? Is that fraction correct? Clear? Charles, is that fraction correct? This 73.75 divided by 7,500. Is that fraction correct? Is that fraction correct? Is that fraction correct? Please confirm, please confirm, please confirm. Now, I'm saying the fraction here, the fraction. So remember, we don't consider, when coming up with this particular fraction, we consider whatever had been issued before the right issue. Before the right issue. Before the right issue. Before the right issue. So these are the shares which have been weighted on time basis. These ones, don't make a mistake. Check on what you have done in all questions. These are the shares which have been weighted on time basis. These are the ones which are not weighted on time basis. Sasa? Yes. First share, these are the shares issued at full market price. Whatever you have there. Sasa? Whatever you have here, these are the shares issued at full market price. There is no difference with what you have done in the other question. There is no any difference with what you have done in the other question. That fraction is correct. Confirm. Is that fraction correct? Yes, that fraction is correct. Minus 1408 times 73.75 divided by 7,500. What are you getting here? The final value. 388. Is that what you're getting? 388. 388. Yes, 388. Okay, sawa. Okay, sawa, sawa. So then from there, I think we are done with that. Let's move to point number 3. In point number 3, we are told the convertible own stock were issued in 2018. In 2018, remember in year 2020, they were issued in 2018. And then you're told 10 convertible own stock are convertible into 1 ordinary share. Okay. And then you're told note number 4 that on 1st of October 2020, the employees of the company were granted a share option to purchase 1 million ordinary shares at shillings 30 each. The average market price was 48. As at the end of the year, none of the employees had exercised the stock option. Now, this means that these stock options will be exercised in the future. These ones, therefore, is the potential ordinary share. And I think we are done here. We don't have any other transaction for the issue of shares. Any other transaction for the issue of shares? I can't see any. I can't see any. So we just need to get the total here. So we have 73.75 plus 740 plus 388. I'm getting 85.03. 85.03. 85.03. Confirm whether you're getting that value. Confirm whether you're getting that value. Yes. Then we compute the basic earnings per share. And we take, and I hope our values here are in thousands of shillings. So these values are in thousands of shillings. Okay. So the patos is 167,200 divided that with 8503. So this will give us what? Divided by answer. So shillings 19.66 per what? Per share. Per share. Yes. So I think that is it. That's what we required there. So the month, for example, those 6 months, we said that there should be a mark for this. There should be the other items which are marked are this. These are the items, including that one, including the theoretical X-ray price. There is always a mark for that. Yes. So 6 months. Roman 2, the diluted earnings per share for the year which ended 31st of December 2020. Now, this company, or the first thing we need to do is basically to identify the potential ordinary share, or basically shares, which our company had in the year 2020. So in this case, we said we check whether the company had convertible securities and equally whether the company had granted the employees share or stock option. So from the information we have below paragraph 1, this company, number 1, had 12% convertible loan notes, convertible loan notes. So this is the first potential ordinary share. And the keyword here is convertible. If they are not convertible, don't consider them here. So equally, those preference shares, don't consider them here. They are not convertible. So we only pick that one. And then in note number 4, we have the share, or basically what? The stock options. The stock options. So what is important here is basically for me to show you how we did with this one, because I think for this one, no problem. You just need to compute the increase in earnings, which is equal to the interest paid net of tax. Increase in number of shares, you use the conversion rate, but I think we can do that quite fast because there was none of them were converted into ordinary shares. So 12% convertible loan notes. So we start by computing the increase in earnings. This one will be equal to the interest which was paid. We multiply that with 1 minus tax rate. With 1 minus tax rate. So take into account there were no convertible loan stock which were converted into ordinary shares. The computation of the interest paid, this one is quite simple. We will take the coupon interest rate, which is this one, or the effective interest rate, 12% times the value for this convertible loan notes given below paragraph 1, and that is 50. That is 50. So that will give us the interest which was paid. We get that interest net of tax. 1 minus tax rate. Tax rate is in note number 5. So 1 minus 0.3, which is 0.7. So that is basically how we work out. We work out that. No problem with that. Then we compute the increase in number of what? Shares. So to compute the increase in number of shares, we need to have the conversion rate. The conversion rate, we have it in note number 3. In note number 3, the second sentence. So we are told 10 convertible loan notes. These ones are supposed to be converted into 1 ordinary share. Into 1 ordinary share. Now, if we go back to the information we have below paragraph 1, we need to determine the number of convertible, not their value, the number, because we are told 10 convertible notes are converted into 1 ordinary shares. How do we get the number of convertible notes which were issued? We will take their value, which is 50,000. We divide that with their par value, which is 10. This will give us the number of convertible notes, which is 5,000. Which is what? 5,000. In that case, we're interested with the number, not their value. So we compute how many ordinary shares would have been issued if they were converted into ordinary shares during the current year. So we just cross multiply, then we divide. I don't think we have any problem with this. So we have 5,000 times 1 divided that with 10. And basically that will give us 500 ordinary shares. So in that case, we have increase in earnings, increase in number of shares. So let's move to the other potential ordinary share, and that is the share or the stock option. The share or stock option. We start by computing increase in earnings. Increase in earnings. Now, the increase in earnings, if you can be able to recall, we say that this one is equal to what? You can be able to recall what is increase in earnings for the stock option or the share option. Yes, we say this one is equal to what? That is something we discussed in our previous class. To December, this one is equal to what? Who can be able to recall? Who can be able to recall? We say that this one is always equal to 0. This one is equal to 0 simply because we said that a stock or a share option is basically a privilege which is given to the employees to buy the shares of the company in the future at a price below the market price. They are not entitled to any form of return from the company until they buy shares. So even if they exercise them, they bought the shares during the current year, there will be no any savings from the company. It's not like these convertible loans whereby the company pay interest to the holders. If they convert them into ordinary shares, the company will do, there will be some savings by the company because the company will not pay interest. The increase in earnings here we said is always equal to 0. What about the increase? The increase in number of shares. Increase in number of shares. This one we said is equal to the bonus element. The bonus element. So the shares which would have been issued free of charge if the employees exercise the stock option during the current year. How do we compute this bonus element? We take the total shares which would have been issued to the employees minus the shares which would have been issued to them at full market price, minus the issue at full market price. And how do we compute this one? This one is computed by determining the amount of money the company would have received from the employees. We divide that with the average market price per share. That is how we compute these shares, which would have been issued at full market price, which would have been issued at full market price, which would have been issued at full market what? Price. The shares which would have been issued to them at full market price. The shares which would have been issued to them at full market price. Which would have been issued to them to the employees at full market price. Our video has is behaving again. Our video is misbehaving again. Is it back now? I want us to finish because our time is moving fast. Yes, it is back now. Now, in this case, I've said the increase in number of shares here, we compute, or this one is equal to the bonus element. How do we compute the bonus element? The total shares which would have been issued to the employees if they exercise the stock option during the current year minus the shares which would have been issued to them at full market price. Are we together? Yes. So we take How many shares would have been issued to the employees if they exercised the stock option during the current year? We are told on 1st of October 2020, the company granted the employees an option to buy 1 million ordinary shares. So meaning that if the employees exercise the stock option during the current year, then the shares which would have been issued to them would be 1 million. And then how many shares would have been issued to them at full market price? We compute the amount which the company would have received from the employees, which would be equal to the shares which would have been issued to them times the exercise price. The exercise price in that case is 30. The employees would have paid 30 shillings per share. Then divide that with the market price per share, which is 48. So this will give us the shares which would have been issued to them at full market price. Then you have to check when was this stock option, and basically whatever we get here, these are not the shares which were issued free of charge, but basically what you have computed here are the dilutive number of shares. Dilutive number of shares means these are the shares which reduces the earnings per share, because the shares issued at full market price, this one, we say they are not dilutive. So whatever you have computed here are the dilutive number of shares. Then if you check on the date, the stock option or the share option was granted to the employees, it is 1st of October 2020. This how many months to the end of the year? How many months to the end of the year? Remember, the year is ending December. Is that the position? Yes. So therefore, in case this stock option was granted to the employees during the current year, whatever you get here, this being the dilutive number of shares, you must weigh them on time basis. And don't say that these are bonus shares, because basically what we know is that bonus shares, we don't weigh them on time basis. Don't say these are bonus shares. These are dilutive number of shares. These are the shares which reduces what? The earnings per share. So if the stock option, the share option was granted to the employees, this dilutive number of shares you get here, you weigh them on time basis. You multiply that with 3 out of 12. But if the stock option had been granted to the employees from the start, or as at the start of the year, automatically you don't weigh that on time basis. You only weigh this on time basis if the stock option was granted to the employees in course of what? In course of the year. So that is basically what we get here. And we work out this. Mwalimu is having another class from 6. So this will give us what? 1,000 times 30 divided by 48. We less that from 1,000. So which will give us, I'm getting 375 times 3 out of 12. And basically I'm getting 93.75. That is basically what I'm getting. Then from there, we compute now the diluted earnings per share. I don't know whether you computed this one. Did you compute this? Did you compute that value there? This one should be what? $42, 42. So the diluted earnings per share will basically be equal to the PATOS. To this, we add increase in earnings. Increase in earnings divided by 1/0 plus increase in number of shares. Increase in number of shares. So we already have the PATOS and 1/0. The PATOS and 1/0 is what you have used here. That is 167,200. The 1/0 is 8503. And then in this case, it is important for you to note we have 2 potential ordinary shares. So what you do, you add the increase in earnings for all of them. Even if you're having 3 potential ordinary shares, add the increase in earnings for all of them here. The increase in earnings for this is 42. The increase in earnings for stock option is 0. Make sure even if it is 0, write it here. There is a mark for that. There is a mark for that. Sasa? Yes. Don't say it is 0, you do not write it there. There is always a mark for that. And then to this, we add increase in earnings for both potential ordinary shares, 500, 500. And I hope that was 500. I hope that was 500. And then this one, 93.75. And then now you get the final value there. The final value there, which is what? The diluted earnings per share. The diluted earnings per share. So basically that is it, that what is required as far as this question is concerned. And usually I've said the marks here are allocated to this. So therefore, this is very important. Increase in earnings, increase in number of shares for each potential ordinary share. This is what will give you the marks there. Sasa, yes. So what is marked by the end of the day are those values there. Those values. Those values are the ones which earn you the 4 marks there. Sawa sawa. Yes. So I'm told this one should be 1884. 1884, that is the value I'm given there. Sasa, so I want us to stop at that particular point for now. So it basically means that once we meet in our next class, we move to another topic. So let's stop at that point for now. Have a good or a nice evening. So we continue from there next week on Tuesday. So have a nice evening. computing the depreciation using straight line, we compute depreciation based on cost. So therefore, to compute this depreciation per annum, we will take the cost of the equipment as per the paragraph 1. The cost of equipment is 12 million, but basically we are going to take that as 12,000, and then you multiply that with the rate of depreciation. The rate of depreciation is 25%. So at the straight line, we compute the depreciation based on cost throughout. So meaning that the depreciation here will be uniform. So what do we get here? We have 0.25 and multiply that with 12, and basically that will give us 3,000. It's also important for you to note that if, for example, we are depreciating an asset at the rate of 25%, for you to be able to know this depreciation will be provided for how many years, you can take 100% and basically you divide that with 25%. So this one will give us 4 years. So if you are depreciating an asset on straight line, you provide depreciation for the next 4 years. Yes, and that's why, for example, if you add this, it will give you 12,000. Yes. So then to this, after adding back the depreciation, we then proceed and we less the wear and tear. The wear and tear allowances. Wear and tear allowances. Now, this particular wear and tear allowances, for example, maybe those who are doing PFT, we also refer to them as, generally, we can also refer to them as capital allowances. We can also refer to them as investment allowances. I'll say that these are allowances which are computed, or these are basically allowable expenses which are computed as per the rate or using the rates which are issued by Kenya Revenue Authority. So how do we compute these particular wear and tear allowances? We are going to use the rates which are basically given below paragraph 2. Below paragraph 1, basically, we have allowable wear and tear charges for tax purpose. In the first year, remember, these wear and tear allowances, these ones are provided on the cost of the asset, the cost of this asset. Yes, so the first year is 40%. 40% of this will basically be 4,800. This one, remember, is to be deducted. Year 2 is basically 30% of this, which is 36. And then year 3 is 20% of this, which is basically 24. And basically year 4, that was year 3, year 4 will be 10%. 10% of this basically will be 1,200. Will be 12 what? 1,200. So those are basically the wear and tear allowances. And then what we need to do is basically we proceed and we compute the taxable profit. We compute the taxable profit of this company. So how much will be the taxable profit for the first year? So for the first year, we have 2,400 plus 3,000 minus the 48. And basically, I'm getting 600. Then the other year, we have 27 plus 3,000 minus 36. And basically, I'm getting here what? I'm getting 21. Make sure you confirm those values. Make sure you confirm those values, whether those values are correct. Make sure you confirm whether those values are correct. You confirm whether those values are correct. Yes, then year 3, we have 2,850 plus 3,000 minus 24. And basically, this one will give us 3,450. And then finally, we have 2,550 plus 3,000 minus 1,200. And basically, I'm getting 43 what? 4350. Yes. So that is basically the taxable profit. Now there are some instances, although that one is not required in our question, there are some instances whereby you may be required by the examiner. You compute the current tax. You compute what? The current tax. Remember, in this case, we said the current tax. This is the actual tax to be paid by the company, and this one is computed based on the taxable profit. So to compute this one, we take the taxable profit. This one we can just abbreviate it as TP, taxable profit. And then we multiply that with the tax rate. We multiply that with the tax rate. So are we given the tax rate in this particular question here? Are we given the tax rate? Are we given the tax rate? Yes, we have the tax rate in the just above the requirement. The tax rate is 30%. So if we are required to compute the current tax, basically that one would be 30% of this. 30% 180. 30% will be 63. And basically 30% of 3450. And that one will be equal to 1035. And then 10% of this, sorry, 30%. 30% of 4350. That one will be 1305. So in case the examiner requires you to compute the current tax, that is basically how you compute that. That's how you compute that. Let's move to the other part of the question. The other part of the question, and basically Roman 2. Roman 2, we are required to compute what? Roman 2, we are required to compute the temporary difference. The temporary difference, and that is TD. Recall, in our previous class, we say that this temporary difference, it is basically the difference between two values. It is the difference between the carrying amount and tax base. So this one, TD, that is temporary difference. This one is equal to carrying amount minus the tax base. Minus what? The tax base. Carrying amount minus tax base. Then you have to recall, we said carrying amount, this is the value at which an asset is recorded in the statement of financial position. A tax base is the value of an asset for tax purpose. Is the value of an asset for tax purpose. And therefore, from the information which we have here about this, because here we have only one asset, so what will be the carrying amount? The carrying amount, this one will be equal to the net book value. Because if, for example, you're required to record this equipment in the balance sheet, in the statement of financial position, you record it at the net book value, which is equal to the cost minus accumulated depreciation. So therefore, carrying amount is equal to the net book value, which is equal to the cost minus accumulated depreciation. That is what is important for you to know there. Carrying amount of this equipment will be equal to the net book value, and that is equal to the cost minus accumulated depreciation. What about the tax base? Tax base. Now, tax base, in this case, is something called the written down value. In taxation, we don't talk of the net book value of an asset. We talk of the written down value. Once we have taken the cost of an asset, we have deducted these wear and tear allowances, you get something called the written down value. So to compute this one, we take the cost of the asset minus the wear and tear allowances, minus the wear and tear allowances. Wear and tear allowances, these ones. Yes. So therefore, what we need to do, we need to compute the temporary difference basically for the 4 years. And for us to be able to do that, we will compute the net book, the carrying amount, which is equal to the net book value for the 4 years. We compute the tax base, which is equal to the written down value. So what we need to do here is we have our 4 years, whatever you have here, 30th of June 2022, 30th of June 2023, 30th of June 2024, 30th of June 2025. Then the next item you need to have here is the carrying amount. You can write that in full. Carrying amount, CA. And remember, our values here are in thousands of shillings. Then we will have TB, tax base. Also write that in full. The difference between these two values will be the temporary difference, the TD, the temporary difference, the temporary difference, the temporary difference, the temporary difference. So basically what I've said, having this knowledge now that carrying amount is the net book value, and then tax base is the written down value, then that one becomes quite what? Simple. So we can just compute that directly. So in the first year, we start by computing these net book values, which is equal to the cost minus accumulated depreciation. So the net book value for this equipment at the start of at the end of the first year will be equal to the cost, which is that one, minus depreciation for year one. Minus the depreciation for the first year, only 12,000 minus this. And basically that one will give us 9,000. In year two, we will take the cost minus depreciation for year one and also depreciation for year two. Because at the end of year two, the accumulated depreciation is 6,000. So 12,000 minus 6,000, that will give us 6,000. Then at the end of year three, we take the cost minus depreciation for year one, for year two, for year three. And basically that one will give us 3,000. At the end of year four, we take this minus that, minus that, minus that, minus that. And basically the net book value here will be 0. The asset will be fully depreciated. Yes. So then we compute the tax base, which you're saying is the written down value, and it's equal to the cost minus the wear and tear charges. So the same. So we will take the cost but here we less this one. We less that are wear and tear charges. So 12,000 minus 48, and basically that one will give us 72. So then for year 2, we will take the cost minus this, minus that. So in this case, I'll get 36. In year 3, I'll take the cost minus this, minus that, minus that. And basically we will get what? 12. And then at the end of year 4, I will take the cost minus that, minus that, minus that, minus that. And automatically that one will give us what? Will give us 0. Will give us what? 0. So in our case, we already have the carrying amount. We have the tax base. Having that, then, what do we need to do? We need then to compute the temporary difference. To compute this one, we take the carrying amount minus tax base. So this minus that. And basically that one is the 1,800. Remember, we say that this temporary difference can either be taxable or can be deductible temporary difference. We said we have 2 types of temporary difference. So what is important for you to know here is that if you get a positive figure, because this minus that is a positive figure, that one is called a taxable temporary difference, a positive figure. But if you get a negative figure, you have taken this minus that, you get a negative, it is a deductible temporary difference. Sasa? Yes. So then this minus that will give us 24, which is still taxable temporary difference. This minus that will give us 18, which is taxable temporary difference. And this minus that, which will give us what? Which will give us 0. Which will give us what? Which will give us 0. Which will give us 0. Which will give us what? 0, 0. So basically, this is what was required here. That is what was required. Units, you just need to remember the formula. You just need to know the formula of computing the tax base. Tax base, we have said, is the written down value. It is equal to the cost minus wear and tear allowances, just the way we have computed this one. So you have said to compute this tax base, you are taking the cost minus this. You see these are wear and tear charges, or wear and tear allowances. For the first year, you take this minus that, you get 72. For year 2, you take this minus that, you get 36. In year 3, and that is about carrying amount tax base, that is year 3, you take this minus that, minus that, minus that. Year 4, you take this minus this, minus this, minus that, minus that, which is basically giving us what? 0 units. I hope that is now clear. I hope that is now clear. Yes, so this basically what was required, and the 2 months were allocated
Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0719451155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0719451155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0719451155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to 07194555. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0719451155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 07194555. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Day to enroll: 0719155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll: 0751155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll: 0715115. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today: 0719455. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll: 07115. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll: 0719455. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll: 071945115. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0711155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0719455. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0711155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 071945115. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0711155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 071945155. Students struggling to pass your exams despite trying hard. Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0719455. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your professional excellence. Call us 0719155. Are you a CPA student struggling to pass your exams despite trying hard? In East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional. Call us today to enroll. 0751155. Are you a CPA student your exams despite trying hard? Many students face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 19455. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, professional excellence. Call us 0711155. Are you a CPA student your exams despite trying hard? Many East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At 𝐎𝐻𝐂𝐔𝐒, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Day to enroll. 0451 CPA students struggling to pass your exams despite trying hard. Many students in Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Day to enroll. 07451. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Enroll. 0719451155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0719451155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to excellence. Call us today to enroll. 0719451155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 94511155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0719451155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0719451155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 07194511. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 075115. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 07194555. A student struggling to pass your exams despite trying hard. Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 075115. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 719455. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0711155. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 194511. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 071945115. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0745115. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 0745115. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 94511. Are you a CPA student struggling to pass your exams despite trying hard? Many students in East Africa face difficulty understanding key concepts, lack proper guidance, and struggle to balance work and studies while preparing for exams. At Focus Online College, we simplify CPA learning through structured online classes, affordable fees, and dedicated lecturer support designed to help you succeed. Register today and start your journey to success. Focus Online College, your path to professional excellence. Call us today to enroll. 07194511155. Are you a CPA student struggling to pass your exam?